Hello and welcome everyone to this online session with Hitesh. Hitesh Kakrani is the co-founder of Smiles.ai. Please accept my apologies, viewers, for starting late. Hitesh got stuck in some critical meeting, and if it wasn't for that meeting, we would have started on time. So apologies. With that, let us get going. What I'll try to welcome Hitesh to this online session.
Thank you, Ninad. And my sincere apologies. I'm usually never late by a minute. I'm really, really sorry, and sorry to the viewers as well.
Good. Now we have to make up with some exciting stories,
I
motivational.
hope I can live up to it.
You have to ensure that in this session, create at least 100 more entrepreneurs and startup founders. Yeah. So
If
let's
that's
start at the
possible.
beginning. Let's start at the beginning, Hitesh. How did you think of a startup? Why not, get on with something else?
Absolutely. So, I basically, Jatin and I, who's my brother, luckily my co-founder as well, we both come from a business family where we have grown up in that entire excitement of sort of building a business. Our dad used to then run a manufacturing pharmaceutical business, and just that entire sort of, and we have done all the small things for that entire business, from packaging to even going out as sales individual, taking orders or other things. So we have built all of that. So that sense of excitement when you sort of build something of your own, and that was always there. uh, Maybe just the good feeling of sort of generating and creating some value for your stakeholders, for also your employees. So we've grown up in that environment, and when we sort of grew up, I was the black sheep in the family. All my family is entire doctors and sort of full of healthcare individuals. I ended up doing a MBA from IIM Lucknow and worked with PNG. While I was working with PNG, Jatin, my brother, actually followed suit. He became a dentist or a doctor. So we, as brothers, we were very close, kept talking to each other about maybe all the opportunities that were there in dental care then, how he was trying to set up his own practice, and we would discuss on consumer challenges. We would discuss on how what in what we could do to sort of make healthcare or dental care better for consumers. Eventually, started doing a lot of secondary research on the dental care market, how it is panned out globally. And once we developed that conviction, where are a lot of primary research that we were doing, sort of collaborated with the secondary research or the secondary things that we could find out on about multiple companies building great businesses in this sector. That's where we, into early 2019, sort of took a call to sort of jump into it full time and build Smiles.ai. To sort of just summarize the answer, we always have that, always sort of had that spark to sort of build something. And in fact, in all my MBA interviews, I was shortlisted for 11 colleges. Then, after my CAT results, the 11 sort of colleges that I would have really wanted to, including all the older IIMs or the MDI and MICA. My answer throughout all those interviews was very consistent, that I want to eventually start something of my own. And luckily, by God's grace, sort of figured out, or got an opportunity. But we were the opportunity came in very organically also. So it was at the back of your mind, or more like an instinct that you always wanted to. And luckily, when the time or the opportunity felt right, we sort of tried and made that decision of starting up.
Great. This is not a commercial break, but maybe you can tell the viewers in exactly 2 minutes what Smiles.ai does, so that they're familiar
Sure,
with what. Yeah.
absolutely. Hopefully, if they're not, it will help me drive some more patients to our clinics as well.
2 minutes, 2 minutes, not more. 120
Absolutely.
seconds.
Absolutely, thanks to your and 100x training, we are well trained at 30 seconds, 1 minute, 2 minutes, whatever time we have with the investors or the audience. So at Smiles.ai, the idea is to build India's largest and most trusted dental care brand. If you look at today's market, although there is very high degree of demand, income levels are growing, people are sort of wanting to have better teeth. Millennial generation wants to have an attractive smile. But if you look at the overall supply, 99.5% of the market today is catered by individual dentist-owned clinics, which leads to very high degree of pricing and quality uncertainty. Like simple root canal, if you want to take as a patient, you don't know, you will end up paying 800 or 20,000. There was a specific term called dental anxiety that consumers experience before going to a dentist. That's exactly, and because of that, what would happen is, when you hate going to a dentist, you only go to them when it's absolutely necessary, like when you have an unbearable toothache or pain. So all the other use cases of cosmetic and preventive dentistry were very hugely untapped in India. So this was the opportunity that we are trying to solve for with Smiles.ai. The idea is to build very, very credible and convenient diagnosis using our web app, which is using smartphones. So today, the kind of cameras that we have in the smartphone and the tech that we have built as a company, you can, sitting at your home, take a proper diagnosis, get an absolute pre-purchase clarity on what amount you would pay, how would your teeth look like after the treatment, how they look currently. It's almost solving for a how Uber and Ola solved for the pre-purchase clarity in the mobility space. And the second part of the solution, because it's healthcare, we wanted to own the entire experience also. So we actually physically run our own clinics. In that clinics, we have uh, entirely controlled experience. And once the consumers absolutely sorted with the pre-purchase clarity, we also ensure that they have a great delivery experience. So to summarize, Smiles.ai is a complete full stack dental care solution platform, where from the point of just building awareness on what your teeth needs are, what they need, how you could have more attractive smile, how could you have a healthier smile, just building that point of knowledge or point of sort of contact awareness, and then delivering the entire solution in a very cost effective manner, is what our sort of approach is. The idea is to build something like Lenskart of dental care, with the kind of backend integrations and backend optimizations that we are doing, where we can take a lot of solutions like aligners directly to consumer. So for example, if they go to a dentist today, they might have to pay 1.5 2 lakh for a treatment like aligners. We deliver that in a 40 to 45,000 price range, primarily because now we are even manufacturing some of these things. So usually when anything comes to you from a dentist, any crown, cap, dental implant, aligner, it would have traveled to 6 to 7 different layers of supply people or supply companies, which inflates the cost. So we are bypassing that. We are building directly, delivering to the consumers, also bypassing the referral commissions in the process. So overall, the idea is to have a great quality delivered at good cost, and have on top of it build a very, very strong discovery experience, where people at least know that, okay, my dental care is more wellness and not sick care. So that's the overall idea, to build a very strong convenience and credibility in the dental care market.
Hitesh, that was more than 2 minutes, but I let it go.
This is
Could
something
you,
I can talk about for hours. So, so pardon me for
so
this.
if one line you have to say full stack dental care is how you would put it?
Yeah, full stack dental care program, or I would possibly say convenient diagnosis and credible delivery.
Okay, convenient. That's great. So, viewers, if you have any questions, don't hesitate. Please put them in the comments column. I'll take it as and when it comes. Please start your questions. So, talk a little bit about your funding journey, Hitesh. You first check was written by 100x, and then Sequoia, and then now 23 million. What are the lessons you learned, and more importantly, what will you tell viewers in terms of, so first quickly about your funding journey and something which you would pass on to viewers saying, you know what, this is what you need to do, right?
Absolutely. So, to answer the first part of the question, overall, I think what we were doing initially was being very close to our customers. Like I said, starting from where I left in the previous question, we decided to sort of, when we were sure of the opportunity, we decided to sort of, obviously, it was a bootstrap journey at the start of it. And we Indore is our hometown, so we sort of put our base back into a place, into that place, to optimize for cost, optimize for the relationships that we already had there, and started working with the first few bunch of dentists to see whether how we can reach to a journey of product market fit. I think once we were getting closer to that product market fit, while we were doing that well, I think we were also getting confused between multiple opportunities that you see on the way, because any time you are building a startup or you are solving for a bigger problem, you always have smaller adjacent problems that excite you or that possibly look like a quick money. And especially in your early days, you want to have good revenues, you want to have more and more customer love from different kind of offerings that you can generate. So while we were doing the core part well, I think we were a little confused. That is exactly a point in time where 100x came into our journey. And I still remember we used to write to several VCs. Then a lot of them were showing interest in the conversations, and it would go on. But a lot of people who would on this call or possibly in their journeys interact with VCs would realize that it's a long, arduous journey of building a relationship, and the triggers to close often are not there until unless you build it for them. So that is where we were struggling. So I think, just to summarize, we were doing well on finding the product market fit, or what the core business operating model should be, where how and what value are we generating for the consumers. But I think we were really struggling to maybe keep our focus on the right things, and also maybe in parallel, because we come from a background where sustaining a bootstrap startup or burning more than a certain amount, where we were supporting the company from our savings. So doing that for a long time was also not sustainable. Luckily, at that juncture where we were sort of in middle of all of this, 100x came in our journey. And I still remember the email that we had written to Shashank on helping us, on sharing our journey and the kind of help that we needed also. I think it was a Tuesday, and he helped us with another call on Thursday with the entire team about for 30 minutes. From that 30-minute conversation, I think we were invited. These were like good 2019 pre-COVID days, where most of the meetings were physical. And we happened, and we had always sort of looked up to Sanjay from the kind of prolific angel investments, most of the successful startups that we had looked at. So with someone like him, I think we were the batch one, so there was little that we knew about 100x. But I think overall, from a team perspective, the kind of individuals that had come together to build 100x, we were very confident on that individuals, and we could see that 100x would anyway sort of be a good enabler. So I think from Wednesday when we had that conversation, and next Monday when we met in the 100x office at 91 Springboard in Vikroli, right after the conversation we had a term sheet. And I think that evening itself we formalized the partnership. From then on, obviously, it was a great experience. I think I just mentioned it in last conversation with Vatsal also. We were very pleasantly surprised to see that beyond the investment and uh, overall just to support, because we really needed two things that I told you about. One was the fact that who somebody who has seen this journey multiple times, could help us or guide us in the right direction and has a skin in the game. And second thing was an access to the formal VC or fundraising ecosystem. So we were expecting these two things from 100x, and I think we got more and enough of it. But what we were also not expecting was the fact that we will also be invited for a 2 weeks workshop and groomed by some of the top startup founders or people in the ecosystem who know the world in and out. So it was a great thing, and we were obviously pleasantly surprised with the 2 weeks of classroom that we had. That really enabled us to sort of sharpen our pitches as well. But beyond that, just interacting with people who you wanted to be like was very inspiring. I think some of them ended up as our angel investors also after having conversations with us. But that is, I think, whatever for the maybe a lack of a better word, the inflection point in our journey where things turned around and maybe it went on an upward spiral from then on. We sort of the things that I was mentioning earlier, Sanjay and team helped us figure out that we need to keep our focus on the right things, build a core business first, possibly cut down on any sort of peripheral things that we were trying to do, and build that one scalable solution which can grow very quickly first, and then sort of optimize for peripheral revenue items or other things. Secondly, like I said, the ecosystem access that we were looking at, I think Pitch Day gave us that. I think giving standing on that IIT Bombay stage and giving a pitch from the top of the stage, 200 plus investors for 200 plus investors is still like a memorable memory. And post that, I think Chiratae and Sequoia, we met Chiratae in the pitch day itself. The first contact was established there, which led to multiple meetings, and then eventually we were able to close the round. We also had a lot of angel commitments, some of them which could we could honor, some of them we had to sort of politely decline because of the round raise we were looking at then. But the first million that we raised from Sequoia and Chiratae as a seed round in early 2020, all the seeds of that were laid in the pitch day itself. So both the things in terms of access to ecosystem or right guidance we were looking at, and on top of it, uh, we also had the mentorship that came through from that 2 weeks of classroom with great startup founders and even the 100x team as well. So that point in time, and once you raised, like this question was specifically about the fundraising journey. Overall, I think from then on, once you get a hang of it, once you get that confidence that somebody who understands this world is supporting you, because a lot of these conversations, a lot of people who are reaching out to the investors, either angel investors or VC, would realize that there are so many times when you want to talk it out, or when you want to discuss the terms of someone, what someone is proposing, when you want to discuss the credibility of an ex-investor. So somebody who knows the world in and out, if he or that institution is standing behind you and guiding you, so that is where it changed a lot of things for us, because we could even more confidently deal with existing conversations. And like I said, pitch day also gave us a lot of new conversations. And once we got the top VCs on board, it also became a slightly easier journey in terms of, I think fundraising is an important part of it, but the kind of institutions that you get associated with in that journey also keeps improving your credibility for more bigger, larger institutions to come in. So that has been our experience. And like I said, the inflection point happened in that journey was 100x.
Great. I think thanks for sharing it. It will inspire a lot of people. In fact, Bhushan has asked a question, and I'll take some of them. How do you find angel investors for early stage startup? So you've answered most little bit of it by talking about 100x.
Yes.
Maybe just a 1 minute answer to him.
Absolutely. And like I said, on the second part of the question, I possibly just like I'll connect it to that as well. In terms of, I think, first as founders, it's what we should, and what again it has been a learning for us also, is that if you're able to demonstrate the PMF at a micro level, that is a good sort of enough time to then maybe start to look out for the right support ecosystem to scale that solution, and not try to sort of go a lot of horizontal uh, increment before that. So maybe work with five dentists or five doctors before you sort of strike a PMF, and work very deeply with them in and out, versus trying to work with 50 and trying to demonstrate a scale to any angel investor. So to Bhushan's question, any angel investor would look at the depth of the solution. So first be ready with that depth, because it doesn't matter if you're working with five or 100. Scale is something that he or she is coming in to support you develop, or the VC would come in. So in terms of, first you have to be ready before you start finding out, and the readiness would be in the fact that how deep you've worked with, how much the consumers value your solution or your partners value your solution. That could be one, two, or five. But if you could demonstrate the fact that there are 5 lakh more people like this, and this 5 people already love my solution, so if you give me money, I will take this from this 5 people to that 5 lakh people. That is the kind of conversation first you have to be ready with. You can't possibly go maybe at an idea stage. There are a lot of things that can happen at an idea stage also, but you will have to develop that level of credibility to have somebody invest the right amount of time in that conversation. About discovering angel investors, there are multiple platforms. I have very little experience on that in terms of angel list or any other platforms that you can look out to find angel investors in your ecosystem. If you're connected to some other founders, or well, I think a lot of people are, like I said, there is, I think once you're in this ecosystem, you would also realize that more than you trying to find the right investors are looking forward to finding the right founders.
Yeah.
So,
So,
so if you're able to develop the right solution and right visibility for yourself, finding angel investors should not be a challenge. And I think 100x also sparked a lot of. I think it was one of the first, or possibly the first, micro VC who picked up the opportunity. I think a lot of other followed suit, and there are a rally of micro VCs that you can also look forward to in trying to raise your first angel round.
sure. So, Hitesh, you told the viewers that Wednesday you reached out and Shashank spoke and Thursday spoke. The Monday following that, you met us and you got a term sheet and ISAFE was signed. Can you, kind of again repeat your experience? If it is not for iSafe, these things wouldn't move so fast. So, was iSafe critical in the whole journey to get an immediate commitment and signing up and 100x what you did?
No, absolutely. And now I've seen both sides of the spectrum, so I can contrast it better also, because all other rounds that happened for us after the ICF were SHA rounds. And just the sheer legal documentation, the bandwidth it takes out of you as founder, especially at a seed stage uh, you don't have maybe as many resources as well, because primarily when people are raising the seed round, uh, a lot of the legwork is also done by the founders, because you don't have the right resources in place to run the business possibly. uh, Founders are the intellectual capital of the company as well, and all others are primarily who are looking after execution and helping the founders execute. So from that perspective, the kind of bandwidth that we had to dedicate to SHA at different stages of our fundraising, or even the cost angle, because the involvement of legal counsels on either sides to be able to structure the SHA, and all of these things are where we can. Now I can obviously feel how easy it was. I think I mentioned on the term sheet time signing timeline, in a week from then we had money in the bank as well. Yagnesh was super helpful in terms of helping us, asking us for some documents and other things. The diligence was super quick, and as soon as the diligence got over, I think in a week's time itself, we had the capital in the bank as well, versus a 2 to 3 month minimum period that it takes for an SHA round. So I think resources capital would be one part of it, or maybe the commercial expenses that you end up making when you're trying to sign an SHA, or the complications, the bandwidth of sort of negotiating all of that while you're building your business itself is another thing that ISAF really saved us from.
So there are a couple of questions related to your business. So let me take them together. Dr. Suraj Mehta is asking, how do you estimate the TAM for Smiles.ai? Just a quick response.
So broadly, 2% of individuals in India on an average take dental care once in a year, or in every year. So overall, basically, just from a market size perspective, also there is a top-down calculation that you can do from number of population into 2% into the average ticket size. There is an sort of bottom-up calculation that you can do. Broadly, any kind of calculation that you do, you will arrive at a 4 to 7 billion kind of a market size for dental care in India, and 3 lakh dentists, 2 lakh dental clinics. Out of that, 3 lakh 50,000 are specialist dentists, 2.5 lakhs are BTS or graduate dentists. So this is broadly the overall spectrum in terms of partners or the overall audience that you can look at. And currently, we are looking at morely curative dental care, which is, like I said, 2% of the active population opting for it every year. You can also uh, uh, incrementally sort of once in 3 years is when an average Indian should ideally uses dental care currently, and once in 6 months is ideally when they should use. So there is a tremendous scope of increasing preventive and cosmetic dental care in India, which would again amplify TEM. So, like I said, the two opportunities that we are looking forward to is first improving the experience in curative market of dental care, and then second is to sort of increase the overall untapped potential of cosmetic and dental care, which would should increase the TAM further.
So there's Meharsh Bajaj is asking, the physical dental clinics, are they owned by you or you have partnerships?
No, we primarily partner. We are a tech company at heart. The idea is to be able to optimize for the experience without being physically present in the clinics. A lot of tech that we have built integrates the entire diagnostics inside the clinics, so procurement from dental labs to everything, which helps us and gives us the ability to control the experience without being physically present inside the clinics.
So there are two questions which I will quickly respond so I can close that. Kundan is asking about a tech company. You can always apply to 100x. Go to our website 100x.vc slash class 08 and send your pitch deck. You've heard Hitesh saying we move fast, we write the first check, and we invest on iSafe. Abhijit Malankar is also asking a question. Yes, we are sector agnostic. You can submit your pitch deck. Remember, we fund Indian startups. So if your startup is registered in India, we will go for it. Hitesh, maybe you might want to just share some of your general thoughts on scaling up, because that becomes very critical in the funding process. Unless you have a rapidly scalable business model, just give two, three broad pointers which startup entrepreneurs should bear in mind for scaling up.
Absolutely. No, like a lot of founders, I think luckily we had some sort of friends and other people from the ecosystem. But when you take external money, it also brings in a lot of accountability and a lot of uh, uh, sort of expectation in terms of growing and building the business together. That is where the scalability sort of becomes a critical angle, because VCs primarily look for highly scalable businesses that can sort of over a period of 3 to 4 years scale to a point where they become really large businesses. I think one critical angle of scaling up is where you narrow down your focus to just one thing that you want to do really well and do at scale versus multiple things that you would want to do around the business. Because uh, like for us also, dental care services, where we wanted to pick up, even within those services we identified the high ticket size one time treatments like aligners, implants, and now we are exclusively focusing on delivery of those treatments at scale first, because even within the bouquet of services there is so much complexity that being able to deliver a good experience at scale becomes challenge. So narrowing down focus to the most critical item where you have high degree of PMF is the first step to scale something. Second, I think, would be very clearly called out responsibility areas for all the people involved. So any, like if you're building a team around it, who's responsible for what metrics, whose timeline starts when, what is your goal as founders? Obviously, one important thing or other two important things that you have to always deliver for your team is absolute clarity and energy. In terms of energy as a brute force to be able to do a lot of things, but there should be absolute clarity, because if you are confused you will not be able to give that clarity, and that loss of focus will eventually lead to a shabby execution which will not let you scale. So clarity from your head that what is the immediate target that you want to scale up on, and secondly, clarity of the solution that you're scaling up. That are again like, so first would be I think identifying focus area. Second would be fixing accountability, and in terms of accountability at a people level and at a process level, if you're able to fix accountability, and lastly, if you've very clearly identified targets and which are very doable, but at the same time you have to stretch to be able to deliver. You're pushing your limits every day to be able to get there. So a combination of these three things is where where I think somebody can find solution on how to scale. Again, we are still in that journey, so I'm sure we are learning as well. But
No, no, it's good to share. Share your. So, viewers, please post your questions. I'm going to wind it down in the next 5 minutes. So, whatever questions are there, Neil Shukla and Ms. Kalyani, please go ahead, send your pitch deck to the website 100x.vc slash class 08. It's flashing on a screen. Our team will review and revert to you. Hina Dapke is asking you a question, Hitesh. How do you measure, since you use marketing channels, how do you measure, or which is the best one to give ROAS, return on ad spent? Hina Dapke is asking you that question.
got it. No, we are in a place where, like I mentioned earlier, dental care acquisition is one of the major problems in dental care. So it is important for us to be on the top of acquisition, especially in some of our cosmetic categories like aligners, where it's a awareness creation or market creation sort of a job that we have to do. So overall, our experience has been that you need to identify where your audience is, what kind of filters or other things that you can use to identify your audience and build the cohorts on that particular platform. So it can be like now the strategy follow is platform that is very platform agnostic, but it is very cohort based on the kind of target audience that we have identified across these channels. Second, when you go for a more cohort based model, you're also able to optimize your ad spends across platforms, because most of the social media platforms in a limited time category also work in a very plateau kind of a model, where after a certain point the quality of leads that you generate and the cost significantly keeps going up while the quality comes down. So for example, as a business, if I identify I'm generating 1000 leads from Facebook at a 95 sort of a CPL, and the quality is great, but if I try to push Facebook to give me 5000 leads, the CPL goes up to 265 and the quality of lead also goes down, and my sales and qualification team then struggle. So versus pushing your pedal on just one platform, it's very important to identify the cohorts, see the other platforms that they are also going to, try to build a strategy where you sort of build a unique relationship with your users by display and engagement across multiple platforms. We are now even doing BTL activities and other things offline, as things get better in terms of for the world coming back to its original self. So it has to be a healthy mix of everything that you can do to reach out to the consumer, and eventually you have to keep your eye on the consumer and identify the right channels of reaching them, versus banking too much on just one channel and pushing the pedal on it to be able to optimize over the cost.
Great. Gautam Dandekar asking what is the revenue expected. I think there's no hard and fast figure. It all depends on the industry. Dr. Suraj Mehta asked a very interesting question, which I'm going to take at the end because I'm going to nail you with that question. If there's any other question, please, I will screech in one last question to Hitesh before I let him go, and before he responds to Dr. Mehta's question. Hitesh, how would you think people should approach fundraising? 100x is money and beyond. I think that beyond part is something is unique. Again, quickly, what do you think on that, and what has been your experience on that beyond money part?
No, it's like I said, like I started with, we were obviously looking for access to capital, but the beyond part in terms of sort of helping us identify the right focus areas, like you were discussing about scale, right? Identifying the fact that you will be, what are the right focus areas to be able to build that scale. Uh, right from that to then exposing us to multiple sort of companies, uh, that I think Sanjay used to take multiple sessions on helping us understand the journeys of various companies who at some point were in our stage. He was an early investor in Oyo. I still remember in class one when he told us about the early days of Oyo. You can relate to it in terms of the scale that they were at, and then you see like a mammoth company being built in the last 5 to 8 years, and you are able to sort of have that confidence that maybe if you do the right things, you can also get there. And somebody who you see as a huge unicorn right now, or a great institution or a company, they were also at the point that you are in, maybe, and the kind of founders that they came in to take the sessions, when you are able to relate with them, identify with them, I think the kind of confidence that it gives you is beyond fundraising. So I think overall, just from the check size or from the investment, beyond that, the kind of support that we had on developing that confidence as founders, because at a lot of times during this journey you have to also challenge yourself that whether I will be able to do it or we will be able to do it, because as founders you are also in very very different shoes. In 6 months, if things turn out well for you, you are dealing with completely different kind of stakeholders, completely different kind of capital, and completely different kind of a team or employees as well. So be able to evolve in that regard, to be able to continuously sort of rediscover yourself as an individual, also requires a very high degree of confidence. So I think that first degree of confidence, that first pat on the back saying, "Ki, okay, somebody who invested in Logitech, somebody who invested in Oyo, somebody who's a so well respected name across the institutions, across the Indian startup ecosystem, has backed you. So they would have seen something in you." That kind of confidence is also, I think, something that we don't talk about too much in terms of value add, but I think really helped us get to the next level.
Sure. Quick responses. Hina Dapke again. She's asking, what was your revenue when you came to 100x?
I think we were doing about 15 lakh per month kind of a revenue, but I think revenue, and Ninad can possibly guide us better on this. It's very
Sure.
subjective from the sector
True.
that you are in, very subjective to the kind of
True.
business that you are in. For us, because we were in a business where people were actually paying us to sort of take dental care services, having some actual revenue were more like a sign of PMF. You can be a tech
Sure.
platform, you can be a SaaS tool where people you just have free users and zero revenue. I think in our batch itself we had a lot of people. Somebody who was doing fintech had no revenue but was dispersing loans to students. So I think it's a very subjective conversation on
Very
what could
true.
be the revenue then.
So, just quickly, Shantanu has asked second time, so I'll take one last question. How do you convince people to join you in early stage?
What's it?
Getting good. So, I know this is a kind of a deep question, but just give a quick response, Hitesh.
That's a very interesting question, because as founders, no matter the team that you put in, you will always have some sort of vacuum areas. For us, we didn't have great exposure to tech, both of us, and we wanted to build a tech company. So getting a good co-founder or sort of founding partner, CTO, was critical item for us. We didn't have too much experience on digital marketing, so that was another area where we needed some sort of experience and guidance on. So obviously, you will need some great folks to join your team early in the journey, and you wouldn't have maybe too much capital then. See, as founders, you always have to be in a selling mode, whether it's investors, employees, consumers. So first of all, anybody who would come in has to believe in the story, because only then they will stick with you for 5 to 6 years, because every in a 5 to 6 year timeline they will see the positives, they will see the negatives. So from the top to bottom, there will be like a sinusoid. People who will come for the commercial interest will leave you as soon as you enter a phase of maybe not so good revenue growth or not so good interest from the investors. So first of all, you need to build that vision in them where it is more like a shared vision, and also keep obviously commercial interest aligned in the way that the wealth creation for them should also be very very nice. If you're wanting them to behave like founders, you have to also be generous, you also have to be very thoughtful in terms of sharing whatever you have built till now. And the more you treat them, or the more you make them feel as a part of the business in terms of responsibilities, I think it should be equally done so in terms of sharing any good things that comes with business doing well.
What was the team size when 100x funded you? Manit
I
is
think
asking.
that time we were roughly about, I think, 11 or 12 people overall.
Yeah, no. Okay, great. So I'm going to quickly now go to the last section of questions. This is an interesting question Dr. Mehta has asked. What are the three most difficult things in your first 100 days? And how did you overcome them? Three.
It's a nice question. Uh, First would be, I think, getting the right people, because
Okay.
like you can obviously like I said initially, in the initial days there would be obviously some skill set that you lack as a founder, and you have no money or other things to compensate for it, you keep taking some help. So we did a lot of, like, I learned a lot of SEO myself. I tried to do some, but then you never get to a expertise level where you are able to sort of optimize too much. So that's one area where, like, I think finding the right people to come join you, being very objective about, okay, if I'm building this business and these are the 4 or 5 strengths that I would require, how do I get in the right person for each of these things, and at what stage will it become critical to have a person in these roles? So identifying the right people and getting them on board initially
Number one.
stages when you, yeah, when you don't have
Number
maybe
one.
the
Number
money
two.
resources, that's number one. uh, Number two would be, I think, getting the right investment partner over time once you're sure of the PMF, because, like, I initially said, and you will also possibly realize that once you start up and you have some sort of an access to ecosystem, uh, getting, like, money is also trying to find the right founders. So you will have the opportunity to find money, but getting the right people on board is supremely important, because the I think a lot of people at the early stages don't realize the power of having some shareholders on board. They also have their own rights, a lot of people. So identifying people who have faith in you and your vision is very, very important. And they shouldn't be on your cap table, or they shouldn't be a part of your journey only with an intent to make money.
Sure. So right
So,
investment partner, right
right,
people
right
in it.
investor more from a beyond perspective than just the capital perspective.
Well,
So,
and you have narrated your experience with 100x, so
yeah,
that is taken care of. And anything
absolutely.
else you want to add?
and
Number three,
and
or that
lastly, no, I think lastly it's just to keep your focus on the right thing, especially when you have capital, because a lot of times you end up thinking, uh, maybe cost goes for a toss. The moment you have capital, you start ending up sort of doing unnecessary expenses, either maybe just striking that balance between growth and efficiency is very, very important, because, like, a lot of, I think, within the 2 3 years of starting up itself, we have seen a very, very positive cycle of a lot of boom in the market to the how the situation is has been like very recently. So the markets will keep turning up and down, but the idea is to build very strong fundamental business and not get sort of taken for a ride by maybe the capital that you have raised to sort of try to do too much, or not care about the cost or the fundamentals of the business and only worry about the pipeline. I think as founders you will always be in a place where you have to be very sure of your own priorities and not get confused, because every person that you meet beyond your shareholders also will give you some advice. But what advice to take and what to not take, how to keep your focus on the right things, is, I think, becomes a challenge, especially when the noise around you keeps increasing too much.
great. Let me ask you a final question.
Please.
One attribute a startup founder should have. One, just one. The most important.
Perseverance for sure.
Perseverance.
Every, yeah.
Perseverance. Okay, great, fantastic. Thank you for joining. You, I want you to give some very last closing thoughts to everyone, which they can carry home. And remember, all of you, if you want to come to 100x, is very straightforward. Our model is very fast. We look at all the pitches, submit them to 100x.vc slash class 08. Last thoughts from you, Hitesh. Closing, absolutely the closing thoughts.
Well, I would just possibly close by saying all the best to everyone who's in their journey very early in the journey. I think it feels terribly hard to do so, and you possibly every day end up sort of reevaluating your decisions. The only thing that I would say is just keep your accountability very, very high as an individual, because once you are farther in your journey, when you're further up in your journey, you have a lot of accountability in terms of shareholders, VCs who come on board. There is an entire team who's depending on you for either decision making or guidance and all of that. So you naturally become accountable as a person. But when you're very early in your journey, when you're bootstrapped, when, like, there would be so many days when you can just postpone your work to tomorrow and say कि आज काम नहीं करना है या मन नहीं कर रहा है. But that is the part where you would have to be very accountable, and, like, we set very, very strict timelines for ourselves, saying that by November we have to do this, by December we have to do this, so that, and we try to keep that accountability in a way like somebody external has imposed it on us. So, like I mentioned, quality as the perseverance, having that accountability and honesty to yourself and not to anyone else is I think the key to succeed as well. or key to sort of maybe like go ahead in your startup journey as well, because once you have investors, accountability aa jayegi, but before investors come on board, accountability is important as well.
No, very, very nice. Accountability is such a important topic. Has so much depth, so much meaning. Thank you, Hitesh, for joining us for this online session, sharing your thoughts, sharing your entire experience of your funding journey, and motivating all our viewers to join this exhilarating journey of being a startup founder. Remember, you can always submit a pitch deck anytime on our website. We'll have a look, we'll respond, and god knows, in future you might be on this panel, and I might be speaking to you. So all the very best, stay tuned. We'll have a lot more sessions like this, where we'll share our knowledge, and hope that all of you join this exciting journey of becoming a startup founder with 100x. Thank you, Hitesh, for joining
Thank
us.
you. Thank you so much, Ninad, and really sorry for the delay initially.
Thank you. Thank you. Bye bye.
Bye bye.